Hello and welcome back to All Things Money. I'm your host, David Blain, and today we're covering a list of some meaningless market phrases that make you sound smart on CNBC. And this came from the Business Insider, Henry Blodgett, on June the 16th. We were on the more buyers than sellers when we departed, and one thing that may not have been obvious, whenever you have someone buying a stock, there has to be someone selling. And whenever you have selling, someone has to be buying. And so to imply that there are more buyers than sellers is flat wrong. What you could say is that the price level at which buyers and sellers are willing to trade is either going up or down, but there's always a buyer and a seller for each transaction. The next phrase, there's a lot of cash on the sidelines. Once again, this is a way to suggest that the market will go up if there's a lot of cash. There are indicators that you look at that show the amount of cash that mutual funds have or institutional investors have or in money market accounts. But once again, to imply that you know that the market is going to go up because there are a lot of cash is just meaningless, because once again, if someone takes that cash and buys something, it meant that someone else sold it, and now that person that sold it has cash. And so obviously if the prices are going up, you're trading cash for cash, and so it's somewhat of a meaningless phrase. This cash may eventually move into the market and help propel prices forward, but once again, to ascribe a deeper meaning to this, if you have cash and you buy something from someone else, now that person has the cash. So there's still cash out there. The next one, we're in a bottoming process. This is a classic way to describe a stock or market that has fallen a lot and frankly may do anything from here. It is somewhat useful to understand what's going on in the market, but to imply that you know what's going to happen going forward is just, it's kind of absurd. It's very smart sounding for the analysts to get on there and say, well, we're in a bottoming process. Typically in a bear market, you'll see various stages of the market going down, and to imply that one is a bottoming process can only be known in hindsight. Once again, it can be useful if you're in a bear market to realize that things go down in stages, but to imply that the market won't drop more or that a stock won't drop more if it's in a bottoming process is just simply facetious. The next one we'll talk about is overbought and oversold. These once again are corollaries to stocks up on or stocks down on profit taking and stocks up on bargain hunting. Overbought and oversold. Now I have to be careful because I do use these phrases somewhat. But when the average analyst gets on CNBC, they're implying that the stock market might be due for a direction, and it's very smart sounding that the market is overbought. But the problem is, what exactly does it mean, and does it have any meaning? When we talk about overbought or oversold, what we're talking about is deviation from the normal. So for example, if a market on average in a month, the average month goes up, say 1%, and this month it went up 5%, then what you're implying is that the market is overbought compared to normal. The problem is most of the talking heads on CNBC don't exactly explain what they mean by overbought or oversold in relation to what they don't talk about. Two more that go together is buy on weakness and sell on strength. In general, these two phrases are used when the analyst wants you to buy, they're suggesting that you buy some stock or something, but they don't want to commit to buying today, so they say buy on weakness. Once again, the problem is, what exactly is weakness? Is it, it goes down 10%, it goes down 20%, and you just don't know. The same thing with sell on strength. it's just too vague. Is what is strength? Well, it goes up another 10%, another 20%. And so you'll notice that a lot of these phrases, some of them have an element of truth to them. And if the person on CNBC would just explain them some more, or explain it a little bit more, or give some hard, concrete information, it may be useless. But what they usually do is they just throw it out there, such as, buy Coke on weakness. Well, what exactly do they mean? Well, if they said, well, when the PE, typically for Coke, if it drops to 8%, or not 8%, but if the PE drops to 8, or if the stock drops another 20%, it will be, 3 standard deviations below the average, and so we like to buy it, or it's worth, no more than $30 a share, so if it drops to 30, we would buy it. So these are meaningful phrases, but just to throw out, buy on weakness or sell on strength is somewhat meaningless. The same thing with sell on strength. If the analyst feels like, well, this stock is worth $100 a share and it goes above $100, then sell it. That is some concrete information for somebody to use. But just to sell on strength, it's too vague to have any meaning. Take a wait and see approach. Of course, this is a classic one that doesn't commit the analyst to anything. They just take a wait and see approach. This can be doesn't commit to either buying or selling the market. How long are you supposed to wait? What are you waiting for? What are you doing while you're waiting? What do you do when what you're waiting for finally arrives? Et cetera, et cetera. It just goes on, and so it doesn't offer the investor any concrete information. We try to give actual information that you can use to use. So once again, instead of saying, well, take a wait and see approach, a better explanation would be, well, if you need the money within the next year or 18 months, don't put it in the stock market. Or if this money is long-term investment money, put it in the stock market. I mean, these are very concrete things that we try to explain to people. But just to say, take a wait and see approach offers no value to the investor. The last one, it's a show-me stock, a classic way to describe a company that has blown it, and it sounds really smart, but once again, what exactly is a show-me stock? I'm not really sure. Anyway, that's all the time we have for today's show. Once again, this was the 16 meaningless phrases that will make you sound smart on CNBC. So for All Things Money, I'm David Blain, and we will see you again next week.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.